Goldman, China's secret gold buying surprises yet again. Goldman Sachs' latest nowcast confirms continued strong central bank and institutional gold buying in April, with 68 tons purchased across non-US jurisdictions via the London OTC market.
Welcome to the Morning Markets and Metals with Vince Lancy, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. It's Monday morning, 7:59. I'm Vince Lancy, and this is the GoldFix Market Rundown. There's the homepage. Lots of new stuff up there over the weekend. And let's start with what we're going to talk about today. No snazzy title for today. Gold, platinum, oil, and war. That's what we're calling it so far. Topics are China's secret gold buying surprises yet again. Platinum, Goldman asks if the rally is structural or temporary. That came out before we dropped $75, so they're a little ahead of the curve on that call. JP Morgan ups their worst case odds, and Deutsche Bank models 3 bad scenarios coming out of the Israeli-Iran war. Let's start with the markets. 10-year yields are up 3.5. The dollar is down 13. The S&P 500 is 60.14, up 39, very strong. The VIX is 1976, down 1, which is 5%. Gold down 17 at 34.15. Silver 36.31, up 2. Copper 478, up 6. WTI 71.85, down $1.20 after being up about 1% or more. Natural gas 358, up 11. That's pretty strong. Bitcoin 106.87, up 1,300, hovering near the lows of the last week or two. Palladium 10.43, up 14. Platinum 12.56, $30 bounce after a $75 sell-off. Gold, silver 93.93. Grains mixed with soy pretty strong, and wheat pretty weak, and corn somewhat in the middle on the sell side. We'll be talking about gold, silver, Bitcoin, and oil today when we get to those charts. So we've got 3 commodities to cover. So here we go. Goldman, China's secret gold buying surprises yet again. Goldman Sachs is a story put out over the weekend. Goldman Sachs' latest nowcast confirms continued strong central bank and institutional low-key non-reported. That's what that means. Gold buying in April. Let's make sure we're recording here. In April, with 68 tons purchased across non-US jurisdictions via the London OTC market. There's the story. China's secretive gold buying was first discussed at GoldFix. Zero Hedge, I think, noticed this before everyone. In context of the first time Goldman disclosed their new methodology in pricing gold in Goldman Shares a Gold Secret. Their current figure remains far above the pre-2022 average of 17 tons at 88 tons and above Goldman's current aggressive estimates. Full analysis on that are in the premium post titled China's Secret Gold Buying Surprises Yet Again. Next up is platinum. We'll do oil last. Goldman also had an analysis on platinum, which was contrary gold, attributing the metal's recent rally to transient market forces rather than lasting fundamentals. Now, they put this out before platinum dropped $75, so it's not like they're just jumping on the sell-off. Platinum surged to 1280 and higher, which began during May's Platinum Week, is framed not as a breakout supported by demand or supply imbalances, but as an ETF and speculative-driven event unlikely to be sustained. Now, before you roll your eyes, there's the post. The report does not dismiss platinum's long-term investment case entirely, but urges skepticism towards platinum price rallies unsupported by physical fundamentals. Again, that's their analysis, their opinion. Investors should interpret current prices as noise within a still fundamentally range-bound market. We also give our observations, which put needed context on the situation. Goldman is long gold. And if they're long gold, what have we said for the last year? More specifically, in the last 2 months, every bank that's long gold has been selling silver and selling platinum against it. So that's their opinion, that's their position, and they're not going to fold on the first rally. We have other important reasons for that. That's also continues in platinum's price rally, unsustainable momentum or structural shift, linked at the bottom. Finally, oil, as it is the direct uh, topic of the day with regards to the Israeli-Iran war. The coordinated views of JP Morgan and Deutsche Bank, in contrast with Goldman Sachs, they're bearish on oil, by the way. They're like, it's not going to last long, suggest a rising tail risk for oil markets. While neither forecasts immediate disruption, both JP Morgan and Deutsche stress that forward curves are misaligned with the magnitude of potential geopolitical shocks, something we know a little bit about and we understand where they're coming from. Should further strikes hit Iran core infrastructure, or should Iran respond at sea, price discovery will occur rapidly and disorderly. Uh, Deutsche Bank notes the market remains far from pricing in a Strait of Hormuz event. The bank emphasizes the importance of three unknowns involving trade-offs in what could be, we believe, existential choices Iran must soon make. Now, that full analysis is in the post link there. We would like to emphasize a post that we did called Geopolitics, Oil Lessons from the Greatest Analyst of All Time. We mean that. We give our assessment of the situation. If you're an oil person but not familiar with the Strait of Hormuz, if you're an oil person and not familiar with the Middle East in general, you want to listen to that, because what we do is we take what we all, anyone who reads or listens to me on GoldFix has a good idea of what's going on. But this gives you an idea of everything involving that area in a 15-minute conversation where I distill things that the late, great Peter Butel taught me when we were business partners, and I give them to listeners. You're not going to hear it, and you'll hear parts of it elsewhere, but you're not going to hear this content at this cohesively in one spot. Why the strait is important, the island that's important. That's in another post. The geopolitical aspects of it, the fact that the U.S. is pulling out, that it's a hockey fight now, and well, there are people out there that are overestimating how much we're going to stop this from spreading. Just like there were people back in Peter's day who would overestimate or underestimate our presence there. So the world is changing. Other posts, Hardneck Gold commodities are in an early stage bull. That title is about one section of it. There's a bunch of charts in there that are worth looking at. GoldFix weekend stories. We put out over 9 stories over the weekend. That's pretty much all of them. Masterclass, what is backwardation? That came up in context of platinum. Platinum's backwardated. What does it mean? And we go through that. That's an academic, but hopefully understandable piece on what backwardation is. If you want to understand what backwardation is, for real, listen to that. Alchemy in the blockchain area, that's a piece by Mavs that we're in the process of talking more about in a day or two. Coming soon, CFTC analysis today, tomorrow. CFTC analysis, macro discretionary is back. That's the Sunday Founders discussion for premium. Special how Basel III holds gold price back. It's one of the think pieces we did. We broke down Basel III, and we looked at the fact that even though it's a tier 1 asset, gold still isn't really money according to their criteria. And we view that as a geoeconomic fight. China wants gold to be priced higher. And if Basel III did these things, it would be priced higher. But Basel III is not doing these things. So it's not as bullish as you think. Data on deck. This is Fed week. You can see that there. And let's move to the charts. June 30th is an important date for silver. Macro discretionary will get it if it's above $35. And so far, it's solidly above $35. I personally don't want it to go higher. I want it to stay here or go lower but stay above $35. Because if it runs between now and June 30th, then there will be no money coming in on June 30th. They will have already gotten in today, and I will have missed my trade. Now, mind you, I'm a little bit long, but I'm just saying for the longer term, you want it to catch its breath a little bit now. That's my opinion. And the BRICS Summit is starting soon. We did 3 or 4 pieces on that, what we think is important, for specifically gold vaulting expansion, the coming out of gold for global investors, and other things. We will probably re-emphasize those as people start talking about it again. We want it to be first on that. All right, charts themselves. Let's start with gold and this chart. There's our yellow line, and we're below it. I don't care what's going on in the world. That line is important, not because I drew it, because other reasons exist for it to be there. We made a new high, and we haven't held a new high. That's not bullish. Okay, just keep that in mind. That means the selling is still there, and it's scaling in. It's not just one spot. Dangerous for gold bulls. News items aside. So I'm bullish, don't get me wrong, but I look at that day and I go, I look at today and I say, I want us to close above that yellow line today. If we don't close above it today, I think we'll just drop a little bit more. Next market, silver. As I said, silver looks good. You'll notice gold is down today and silver is up only 4 or 5 cents, right? The last week or so, we had a torrid readjustment. People were buying gold, right? And they were selling silver. And then before the war started, everyone puked gold and bought silver, right? We saw that big, nice, gold went nowhere and silver rocketed, right? And we had that big trade almost 2 weeks ago now. And then last week, the end of the week with the war starting, or, the rumor of the war starting and then the war starting, what did you get? Everyone said, oh, time to sell silver and buy gold again. So it started trading that way. Now, if you look at the board today, everybody's selling gold and they're buying silver, but they're also buying copper. And if they're buying copper, they're probably selling silver. These 3 commodities are very important now. It's almost like a crack spread of behavior. I don't know how long this will last, but you might be seeing the gold silver ratio, bottoming at 88 and topping at 97 now. Who the hell knows? But it's not over. The point is, the gold silver traders who like to buy gold and sell silver, some of them got really damaged, but some of them came back again. They're not all scared to do it again. Some of them are. We need more people to get hurt. That's my wish. Pain for silver shorts. Bitcoin. Personal comment, I said above 100, above 110, we should go to 130. And I put a position on to that effect. And although I haven't been stopped out on paper, meaning I'm not going to sell below 100, this trade is negated below 100. Although that hasn't happened yet, it's taking too long. In fact, this structure is looking pretty shitty to me. So if there's another dip, I won't be buying it. Let's put it that way. And then finally, oil. Oil also had a nice little Bollinger Band breakout. Silver had one. Oil had one. We discussed that in the founders discussion this weekend. That'll be emailed to everyone today. And here we are in day 5 or day 6, and boom. That's an end of impulsive volatility, especially if this line curves up a little bit. Okay, it might be a little bit over your head. You don't follow this stuff, but I'm throwing it out there for the people that do. I'm Vince. Have a great day.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.